Welcome to the next edition of Pizz-Spectives. My name is Rob Pizzichetta, founder of Mont Wealth, and today is something a little bit different. In this edition, we're going to talk to an ex-stock trader and stockbroker, an ex-portfolio manager from a leading Melbourne-based boutique equities fund manager. Brad has successfully forged a career over 20 plus years and spending 12 hours a day trading and investing in share markets. Brad is transitioning to the next chapter of his career. Now, we have many conversations with young adults starting their university degrees and parents worried about the future. But today we want to discuss some of the war stories from over 20 years with Brad, the skill sets he's learned, and also how these skills have helped him begin the next chapter. Welcome, Brad King.
Thanks for having me.
Good to have you. Now, before we do get started, I want to touch on the general advice disclaimer. Anything we discuss today is general of nature only. Anyone acting on this advice does so entirely at their own risk. So now, Brad, let's get into it. How did you get into being a stock trader and portfolio manager? Let's discuss some of your early interest.
Yeah, sure. First, the plan was to go into the Air Force, something I wanted to do from a little kid, but unfortunately hurt my knee, so I missed that. But having said that, by the time they told me, it was after all the uni placements had closed. I was a country boy, wanted to get out of Ballarat and move to Melbourne. So yeah, basically just applied for a bunch of jobs and found one in the mailroom of William Knoll, which I suppose was one of the oldest stockbroking firms back in those days. And that lasted a whopping 3 months before the 9/11 attacks came through. And William Knoll was probably struggling financially at that point in time. So the ASX made a forced merge between them and D&D told us. Yeah, I spent pretty much a year in the mailroom doing that and learning some of the things that people should do and shouldn't do in markets. And it was a real eye-opener for the different characters that end up in financial markets. I suppose you get those really smart people and some of the charlatans, but also some wonderful salespeople and some wonderful relationship people. So I learned a lot from that. And then transitioned into a bit more of the admin side of things, and then started my diploma in financial markets, which I did part-time. And that took me sort of 2 years. Once I completed that morphed into an economics degree at RMIT, which I did after my hours at work.
Yeah, right. So you worked hard. Not only did you work full-time, but you studied part-time. Would you recommend this kind of strategy for the young adults moving into the workforce to get your foot in somewhere, start your job, and then build as you go?
I probably think it's personally more down to the individual. For me, I needed a practical element, so it worked out well. On one hand, I missed out on perhaps some of the partying of O-Week, and perhaps that was a shame, but I also needed that practical application towards an economic degree to have some goal as how that economics would help me and motivate me with my job. Just not sure I would have had that if I had just been a straight student. Some kids are very good at just knuckling down and doing the task, and perhaps I was a little distracted and just needed that, I suppose, career to work towards and give me a bit of discipline as well.
Just like a footballer, some people develop at later stages of life, Brad, and maybe you're still developing.
I'm slow learning.
Now, as you highlighted earlier, September 11 occurred and it had a massive impact to the financial industry. In fact, it probably had a massive impact to the world. How did that kind of mold you? And obviously we would have experienced a few crises, i.e. GFC, Euro debt, and even COVID. What did you learn through that period about yourself, but also about how to manage people's monies and portfolios?
Yeah, look, I suppose initially what I would do is think about it from my perspective and how I would react. But realistically, we're in financial services. So at the end of the day, we're participating on behalf of our clients. So I think what I learned over time was more how the clients react to those situations and managing those expectations, whether you engage with them at the start, your expectations, you need to temper those with what outcomes and goals they want. And then when things don't go as well, or things go really well, you need to keep them updated and say, hey, this has happened, this is why we're here, this is what we should do. And it's more almost like a coaching role and a counseling, because at the end of the day, it's their money and we're a custodian of it. That's our job. And I think I really learned to protect that, because a lot of the people that we were managing money for as well, I guess you have your very wealthy people, but we also had people that we had most of their money and most of their assets, and you want to do the best job that you can for them, because that's going to really dictate the quality of life that they can have.
Yeah. And over those, suppose, 15 years of you working in funds management and stock trading, what were some of the key opportunities you saw? And you got any war story from that experience?
Yeah, I think probably the GFC was difficult. And insofar as that the GFC was really about financial services crisis, not necessarily every industry and every cohort. We used to joke about this being a Great America crisis because that sort of triggered from their liquidity issues and their subprime, and then that sort of cold created a pandemic across the world. But yeah, I think if you were in another industry, I just remember a lot of my friends, like they might have been in food services or something else, and they're like, "What's going on with you cowboys over there? What are you doing?" And it's yeah, it looks really bad on our industry, and that I probably didn't enjoy that at that time. But I think just putting in those transition mechanisms from banking and responsible lending and cleaning up the system, that was probably something that we needed to have happen to the system. Yeah, it definitely was scarring, and particularly the length of time it took to recover. And you throw in COVID, and I think what was amazing was, yes, the fall was horrific. Like, I remember just standing at the end of my bed and it was down 12%. And my wife's just looking at me in disbelief, and she didn't really know what it means. And I don't really know what it means. Where does this go? So that was unbelievably difficult. And I was working at my wife's restaurant trying to explain to clients, hey, we can recover from this, but what we need to do is not panic, but we may need to shift the portfolio to things that we think are going to recover first. I think the best thing that we did at that point in time was recognize that we're going to have to work from home for a protracted time. So we invested in companies like JB Hi-Fi, Kogan, and some of those recovery stocks had been really nailed. And even the small caps, when they did their capital raise, getting involved in those, because they were good businesses with good cash flow. It just, they didn't have the balance sheet to withstand losing up to whatever, almost 100% of their business in some cases, while we didn't know what was going on. So there was certainly a lot of money to be made out of some of those trades, and that was exciting. But yeah, volatility was pretty hectic, especially around the oil stocks as well. Once you went there, it was quite a challenge to manage out of that.
Yeah, unbelievable. And obviously, you're never going to get every call right. It's almost impossible. So what were some of the learnings over the time? You don't have to name any companies that you invested in, but what were some of the learnings, and then in hindsight, say, oh, red flag, I should have done that. Were there any key moments where you just realized light bulb moment?
I started, my first share that I ever bought was OneTel, so that was a pretty big red flag in itself. So that's all, it probably cost me $3,000 in my paper run savings, but it was a good lesson to learn early. It was a cheap lesson in hindsight. I think what I probably learned the most is, yeah, you get into industries, you may get the macro right or wrong or whatever, but I think you want to look at the companies that have a good industry position, have a good cash flow, have the ability to earn, ability to grow, have really good, strong management. Now, things are going to go wrong, but that's where you have a portfolio of them, because at some point in time, a third-party event may happen, and you've just got to be cognizant of that. And I think the way I ran money is I traded a lot. So that's one part of people, that some people have got that brain where they can be calm and trade, and sometimes I would lose my stack, but that's just the way it is. But you've got to be attuned to whether you can handle that or not. And then other people are really good at investing long-term and taking big macro calls, and there's nothing wrong with either of them. They're just very different strategies, and I like to do both of them because it's a bit of a complement. I think what you're doing in growing and building wealth is where you're at from a trading perspective. That's me just making sure that if we're managing money, we're getting in at the right time. We're maximizing that longer term goal as much as we can.
All right. So, Brad, given that 20 plus years of experience in financial markets, and you highlighted earlier the psychological element of trading, whether it's trading or being a portfolio manager long term, what kind of skills have you taken away from that experience? But then also, how have you been able to take that to the next chapter of your life now?
I think I've been through an interesting time, because not only did I probably start trading when, I suppose, the algorithms and things like that weren't there, I suppose that evolution of the market towards a bit more computer trading, plus that exposure we have now to ETFs, the Vanguards, the BlackRocks, those massive enterprises that have so much money in 401ks and the Aussie super funds and the like, the Canadian pension funds or whatever. It's really changed the market volatility. So look, I think it's been just constant evolution of training and learning and recognizing patterns and trends and remembering those cues to execute the trades. Now, it's not for everyone. It's a lonely job being a trader sometimes. You sit there for a long time waiting for something to happen, and sometimes it doesn't. I remember my babysitter one day just going, "What are you doing?" I'm like, "Waiting." And she's like, "Waiting for what?" And so I felt like I was watching The Matrix. You're just waiting for things to move, and sometimes they don't. So I suppose it's just having that level of patience, but also understanding that when things move, you move quick, or you take your time and pacing it. But managing the computers is one thing, but managing people's emotions is another thing too. So there's still plenty of emotion in financial markets, perhaps not as much as there was, because we have these larger institutions controlling the money. So in theory, they should be far more measured in that behavioral 101 context. You're definitely going to see periods of fear and panic, and obviously through good times you see a lot of greed as well. So they're the two emotions that you need to be cognizant of. And my two main rules in markets are never fall in love with the stock and never be a forced seller, because when you're a forced seller, everyone else usually needs to sell, and when you fall in love with it, it usually does the wrong thing by you, like it's an lover. So yeah, you just forget to check the balances, and yeah, so you just got to make sure that as companies evolve, they're still doing the right things. They're not getting lazy or over investing in staff and things like that.
Yeah, great. And I know from my perspective, being an ex-stockbroker, then sales person, helping analysts and portfolio managers identify opportunities in the markets, I feel that I've been able to take that skill set into wealth advice and identifying macro trends, but then also asset allocation strategies, and then also explaining and communicating those to my clients and to the partners of Mont Wealth. And I think for those younger people listening at the moment, that's the skills that I think you can learn over time, and you can take that to whatever you want to do next. So just because you're doing a uni degree today doesn't necessarily mean you're going to be stuck and locked into that into the future. Take away the little learnings you've gotten and take that away with you over 20 years of experience. So now, Brad, you've left the industry, but we're still in contact because you are still working in that space and you're helping a company out at the moment. So do you want to explain a little bit more about what you're doing at the moment?
Yeah, sure. I think probably taking a longer term perspective, one of the things from financial markets that we could see happening is this, and look, it's very political at the moment in Australia, is the energy transition. So some time ago, I invested in a private company called BE Power, and its basically fundamental role is to provide storage solutions for energy markets. We've got 3 projects underway at the moment, which are in various, I suppose, degrees of their product lifetime, but basically it's in the pre-feasibility and up to financial investment decision in pumped hydro storage assets, 2 in Queensland and 1 in Victoria. By that, having the ability to use solar or another sort of energy source that is a byproduct that we can tap into that's cheap or free in solar's case, and then being able to store that water at an above ground location and then send it down a hydraulic system through a turbine and create dispatch storage, from a dispatch storage to power homes or power industry when they need it at peak times. Now that might be when you come home from work and it's really hot and everyone turns on the aircon when you first get up in the morning. And really the job of these storage solutions is to try and take out those, the 2 peaks at the end of each day and try and flatten them as much as we can, because we're going through an energy transition. And one thing that people always ask me is, "Oh, Brad, what do we need? Do we need nuclear? Do we need this? Do we need that?" Look, we just need as much as we can, because energy is very expensive. It's going to continue to be expensive. We're shutting down old generation assets and we're replacing them with small assets. Like you're looking at replacing coal-fired powered stations and replacing them with solar, but they might be 1/10 of the operating size of that. So we need lots of little things all contributing to the network. So from my perspective as a career development, perhaps one thing at Armitage I did okay was build a business within managing portfolio, and we listed that on the stock exchange at the start of last year. And to be honest, 20 years is maybe, perhaps I had my midlife crisis at 41, and a few of my friends have also had that at the same time. But yeah, I really wanted to do something different, and this one came up, but it's still financial markets. And the first job I had was to raise money. So we raised debt. So 16 million in debt. So that was still from my contacts in finance. And I remember when we were talking about this, what we were going to chat about, I think that's one of the most important things in financial markets is having a great network of contacts so that wherever you end up, you're able to tap into that. And that may be debt, it may be equity, it may be mortgages, it may be banks, it may be anything. And hopefully I've done an okay job with that.
Yeah, it's a great network down in Melbourne for that industry. and we're a friendly bunch down here. So, Brad King, I want to say thank you so much for your time. All the best with BE Power. If anyone wants to get in contact with about the industry or that space specifically, how do they get in contact with you?
Yeah, sure. Just jump on BE Power's website. My contact details are there, bepower.com.au. Otherwise, speak to Rob and he can pass out my details if you need to chat about anything. But yeah, I'm happy to help anyone with anything they've got if I'm of use.
Fantastic. Now, again, this is general advice disclaimer. We're not necessarily promoting the product or recommending it at all, the fund or the investment. Do your own work and understand the risks that are associated with this. So, Brad, thanks so much for your time and look forward to catching up with you next time.
Thanks.